Hey everybody, today's stock that we wanted to go through is one that probably everyone is familiar with. That's AirBNB. We wanted to take a look at the past here, and in the late 2020 era is when this stock went public. And believe it or not, AirBNB went stock public at $68 per share, right? But on the very first day of trading, there was so little supply and so much demand, it traded as high as $144 per share. And in fact, if you take a look at this 4-year chart as it's been open so far in its public life, there's really only one time frame where you could have bought it and done pretty well. That was the 2022 low. That $144 day one price compares to a current price of $118. So almost all shareholders are either underwater or flat on this stock since its IPO. Real quickly, let's look back at the high in 2021. Take a look at the enterprise value here, or the value of the company of AirBNB, $104 billion, very high. $6 billion in revenue it had. But here's the best part of what's going on with this name. The growth rate was massive, 77% year-over-year growth. Now remember, 2020, we were all locked down. 2021, everyone started traveling again. But also the work from anywhere situation was in its full foray. Everybody was working from everywhere essentially, and AirBNB was a huge winner, which is why this growth rate was so high and why we're putting such a huge multiple to revenue on this company. So let's jump forward to today, 2024. Enterprise value just $67 billion now. The revenue's grown nicely to $10.5 billion, but where I want everyone to look here is the revenue growth rate. That 77% growth rate that it saw in 2021, now 16%, and in the future only expected to be about 10% revenue growth. That is why the multiple has compressed so greatly. That's bad news for AirBNB, but here's good news for shareholders going forward. First of all, let's take a look at the balance sheet. They have $11 billion in cash and $2 billion in debt. That is $9 billion in net cash they can use to buy back stock. Let's take a look at financial metrics from AirBNB as too. They mint money here. They take $10.5 billion in revenue and they turn it into $4.3 billion in free cash flow. That free cash flow percentage creation is about 40%. Unheard of for almost every company in the S&P and the NASDAQ. It is incredibly high to take 40% of your revenue and turn it into free cash flow. AirBNB is doing it because they are asset light. They don't own any of these houses. They don't have to fix the plumbing. They literally just are software that makes money on every transaction. It's a fantastic business model. So let's talk about one positive catalyst and one potential negative catalyst for AirBNB. First of all, the positive catalyst. Take this $9 billion in cash, add the $4.3 billion in free cash flow that they're about to make this year, and you get $13+ billion in cash that they can use to buy back stock. That's almost 20% of their company without taking a single dollar in debt. That is a massive amount of stock to buy back. That would really help shareholders in shareholder return. Here's one of the negative news pieces though. The 11% growth rate that they're expecting this year, if that has not bottomed yet, there's probably no reason to think that the stock would revalue higher significantly, right? If we have a recession, Airbnbs are going to go down. If work from anywhere goes down, this number probably hasn't bottomed yet. If that growth rate has not bottomed yet and we have a recession, there is some risk on the table with Airbnb. That's everything on Airbnb from us. Hit us on any socials with any questions or comments, and thanks for your time. We appreciate it.